One can have no smaller or greater mastery than the mastery of oneself. Leonardo da Vinci. And Leonardo understood mastery as one of the great masters. What did he focus on? Individual improvement, knowledge, and again, working day after day. Those of you who've seen his sketchbooks and how meticulous he was about planning his work and working his plan. That's what we do every day. 10 to 15 minutes is all we ask here at Charting Wealth. If you want to understand how stocks move, how price flows, how to follow trends, that's what we're talking about. We're not talking about prognosticating. We're not talking about picking up pennies on some market inefficiencies. We're talking about following clearly established trends over and over and over again. That's what our weekly vertical crossovers are all about. That's why we bring that to you. And again, 10 to 15 minutes a day. If you don't have our book, buy it. If you're not a member of our Patreon supporters, please do that too. Let's jump into these charts. We see stock as far as the S&P 500 flat, the Qs up, bonds down the most, and we see that gold is up just a hair. Bonds are down quite decent. We'll talk about that when we get to it, but it's about where I said things would break down. Bonds down the most, Qs up a little, and the S&P about flat. Now we look at the weekly candle. How far has it moved this week so far, going through Wednesday, passing hump day, 2 more days left? We see a nice, decent up candle. Price percent oscillators heading up, derivative oscillators losing a little bit of momentum. Prices above that weekly trend line. That's quite nice. We go to the 2-day chart. What do we see there? We had that 2-day crossover back on Friday, weekend effect, push things through. We can see the first day of this latest 2-day candle. It's going up. We have an upper as far as the candle body itself goes, but we're not hitting a higher high when we look at the wicks on top. Just not getting a higher high. Price percent oscillators lost some of its momentum as far as the way it was heading up at a steeper angle than it is now. Nice, though, the derivative oscillators flipped over to positive. That's good, but again, would love to see that price percent oscillator heading up a little more strongly. We go to the 4-hour chart, and again, how many days now have we had things fairly slipping sideways? Pretty much. Things boomed up on Monday, as the Monday effect typically does for us. And then things are just sort of petering out. We can see candles slowing and all that stuff just slowing down. So we'll pay attention. We'll continue to watch, see what there is to see from these candles and how things keep moving. Remember, it's not the 4-hour chart that we trade off of or practice trade off of. It's the larger charts, the 2-day and the weekly. But again, we do pay attention to what's going on, and it could be just with all of this up movement over about a 4-day period, things have just sort of started slowing down, and it's digesting like it did back between the 9th and the 11th, and then it'll bang up again. So we'll wait and see. Again, the 4-hour chart is one thing, the 2-day still decent, and of course that weekly chart, quite decent. So we'll continue to watch. That trade, of course, is ongoing. Hope that you practice traded that, and we'll continue to watch and see what there is to see. Again, pay close attention to those bigger charts. What's going on the Qs? Well, we see now the nice thing about the Qs is we see a big candle, and of course we have the candle body itself is bigger than the wick in the prior week, which is fantastic. Also a wick on top. Derivative oscillator still losing some momentum, but look at that price percent oscillator heading up nicely. We go to the 2-day chart. That, remember, the crossover was on Tuesday afternoon. That's when that occurred. We went ahead and recorded that somewhere around the 209 mark. And how high did we get through the day? 210.13. Again, we didn't have the weekend effect to help us, but that momentum with that crossover has continued. Look at the derivative oscillator. It's banged up quite nicely. It's good to see it green instead of red. And again, price percent oscillator is heading up on that 2-day chart. Now again, that's just the first day of this latest 2-day candle. Hasn't completed drawing yet. So we'll keep a close eye on that. And we go from the 2-day to the 4-hour. And that's again where we see a little bit of weakness. See a little bit of weakness there. So we'll continue to watch, see what there is to see. And although, not as weak as the S&P, because things did bang up quite a bit higher, which is good. Again, 0.08% for the day. Price percent oscillators where we see that weakening, though, heading down. Derivative oscillator losing a fair bit of momentum. So we'll watch, see what there is to see. Again, pay close attention to those bigger charts. So we go from stocks to bonds. What did I tell you to really, really watch for? Was down movement, down 0.82%. Just the first day of the latest 2-day candle. We look at the weekly chart. Nice down. It looks like it's plumbed lower now. 136.28 is the low for the week. 136.61. Yes, we have reached lower lows and a nice red down candle. That's good. Price percent oscillator heading down. Derivative oscillator still losing downward momentum. Go to the 2-day chart. We had that 2-day crossover, and you know what we did not do? We didn't change our 2-day crossover. That happened on the 17th. The beautiful thing about freestockcharts.com and TC2000, besides the $25 discount if you sign up for it from the link that's in our show notes, is that it's just that easy to change our vertical crossovers, to change the arrows. It's just the best online charting platform I think there is. I love it. Comes to you from the Warden Brothers. What do we see going on? Well, we had that crossover, the jumping in point, somewhere around 137.93, so somewhere around 138. And what was the low throughout the day? 136.88. So that's pretty nice. Quite nice. $1.50, $2. Not bad in just a day with that crossover. And of course, we did see things accelerate, down 82%. Now again, those of you who don't know what we're talking about when we're talking about down trades, we're talking about either a put for you to practice trade or TBF, which is the short of TLT. And of course, what's it doing? As TLT is going down, the inverse is going up. It's an inverse ETF. Just beautiful, my friends. So what we'll continue to do is watch. That's where we are, first day of the latest 2-day candle. Go to that 4-hour chart. Down in the morning, further down in the afternoon. Beautiful. And again, just where we wanted things to go. And we gave you the setup of what we thought would be the strongest to the weakest. Strongest would be bonds. Second strongest would be the Qs. It did move second strongest. And the weakest would be the S&P 500, because that move really took place over the weekend. That was that weekend effect. Now, lastly, we go to gold on the weekly chart. Gold appears to be moving in the second week of up movement. Price percent oscillator still heading down just barely. Derivative oscillator losing downward momentum. Green open box candle, which is, of course, that portends strong movement. Not reaching as high a high as it did the prior week, where it topped out at 139.85. So far, 139.39. Not too far away, but again, hasn't hit that yet. Weekly still in a confirmed down move. Go to the first day of the latest 2-day candle, and what do we see? Sitting right there on the 2-day trend line. Are things going to rotate over going down? Well, the price percent oscillator is still heading up. Derivative oscillator still gaining upward momentum. We'll wait and see what there is to see until the weekly and the 2-day are moving in the same direction. Weekly's down, 2 days up. That's going to have to change before we have anything to trade. For our chart, we can see where things, I guess, topped out back in the morning on Monday, and have sort of been sliding sideways and down a little bit, which is not bad. If gold will reverse over and go down, you can practice buying puts on gold to capture some of that down movement. I wish there were a good inverse fund. I wish DGZ, which is an inverse of gold, was not so illiquid. That means there's a large difference between the bid and the ask, which means you have to make up a lot of ground before you can even break even. When you go into the trade, you're automatically taking a loss. Not what we want to see. That's why we don't talk about GDZ. We talk about practice puts in gold. Folks, that's where we are as we end the day. On Wednesday, go into Thursday. Christmas is only a week away. Fair warning, I will be traveling on Friday. My flight takes off right as the market closes at 4, and I don't get in to my western terminal point until late. So I hope maybe in the airport I'll be able to record the show and get it up. I will try my best so it doesn't get out very late. And I just, again, appreciate you guys being with us. This is exciting. I love bringing this to you every day. It makes me so much better as a trader and investor myself to review these charts every day. And I can promise you, if you will spend 10 to 15 minutes a day, you will figure this out. It will come. It may take some time. Not saying it's not going to take time, energy, and effort, but you've got to practice. You've got to review these charts. Need to practice trade. Fill out at least your weekly market worksheet. Daily market worksheets are available along with the weekly and the trade worksheets for free in the show notes that you can get every day from chartingwealth.com. Just go to the channel or go to the website. Sign up at chartingwealth.com for the free daily review and the once a week review. We'll email that to you as soon as we get it complete at the close of the market, and all the links for the discounts on TC2000, how to buy our book, how to become a Patreon member, those worksheets I told you about, and so much more, plus the daily training. And guess what the training is today? Part 2 of our Options 3-part series. So want you to have that. Spend just a few minutes tonight going over that training. And of course, the wrap up, the down and dirty on how to practice trade options, will come out in part 3. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.